Think. Act. And prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to Money Level Show, where we think, act, and prosper. Today we're with legendary investor Rick Rule. How do you like that title, legendary investor?
At 72, it beats the hell out of dead investor, Daryl.
I can see that. I can see that. So there's been a lot of volatility in the market. It's been volatility galore. There's been talks of tariffs. There's been lack of talks of tariffs, pivoting on tariffs. There's been talks of peace and pivots on peace, and it's just the markets are just going through ups and downs. It's almost like a roller coaster. And so just want to get your general take on the market right now with amidst all this volatility.
Well, Daryl, I love volatility. I believe that market is made on the delta between what things sell for and what they're worth. Now, in order to do that, you have to have a sense of what something is worth. And I've spent my life trying to figure out how to have a sense of that. The beauty of volatility, if you're somebody like me, and you think something's worth $10, and volatility takes it down to $7, why, that gives you a chance to buy a good asset cheap. If later it returns to favor and something you think is worth $10 is selling for $13, it gives you an opportunity to sell dear. Your readers or listeners who are less familiar with this concept than they ought to be should read Ben Graham's famous investing tome, The Intelligent Investor, and the segments on Mr. Market. If you have read Mr. Market, which describes the investment process as a bunch of manic depressives competing with each other, if you understand volatility in that context, you'll come to love it as opposed to fear it.
Hello everyone, this video is sponsored by Power Metal Resources. I'm excited to introduce to you an opportunity of a lifetime with this company. As you may know, we are currently in a broader commodities bull run. We've seen gold rally 26% in 2024. Uranium prices surged significantly since the COVID lows, but some may wonder, are these upward moves over? I argue, no, they are not. In regards to gold, central banks around the world are continuing to buy gold to hedge against the weaponization of the dollar. We also have global debt and deficits that are ballooning to astronomical levels with no signs of slowing down. These factors indicate continued upward pressure on gold prices. And we haven't even mentioned uranium, so there's a huge supply and demand gap of about 26 million pounds currently, and future projections show that these gaps are expected to widen year over year for decades. Prices in uranium must increase to incentivize more production, and I haven't even mentioned the clean energy demand. Major tech companies such as Microsoft, Google, Amazon, they are investing in nuclear energy to power their AI data centers. And lastly, we have countries around the world that are setting carbon net zero goals, and there's a massive gap between these goals and the supply of these critical minerals such as rare earths, nickel, copper, and many others. And these minerals are needed for building electric vehicles, powering renewable energy grids, as well as supporting AI and tech data infrastructure. So Power Metal Resources is a way that you can get exposure to many different metals. They have a global portfolio in different countries such as North America, Saudi Arabia, Oman, Australia, and Africa. The projects are developed internally or through strategic joint ventures. When ready, projects are either sold outright or listed on recognized stock exchanges. This strategy crystallizes value from their exploration and development work. Now, when we talk about valuation of this company, the net asset value of this company is approximately $52 million. They currently have a market capitalization of $25 million. This means that the shares are over 50% cheaper than the valuation of their assets. And this doesn't even account for the expected price increases in the commodities bull market. So in short, Power Metal Resources is positioned to capitalize on these long-term trends. I encourage you to visit their website, powermetalresources.com. You can find them on the London Stock Exchange under ticker POW or the OTC market ticker POWMF. This is not financial advice, and please do your own research and due diligence.
So with that this amount of volatility, the uranium sector has taken a big hit. Many many of these companies are down significantly, and I do want to point your attention to a couple of charts really quick. I've talked to talked to these charts with a couple of uranium experts, and so I want to get your take on it. So this is the first one. This is a chart that was Yellow Cake put out about supply and demand of uranium, and they're projecting, which come from like mine spans. I don't know who that is, but their base case was very conservative compared to other companies like Sprott's, which we'll look at Sprott's here in a second. But they are saying that we have enough supply to meet the demand for the next let's see, until 2028, and then there's a drop off. And so then I just want to share Sprott's outlook really quick, and want to get your take on if these estimates are too conservative or what. So when we look at Sprott, supply it's reaching demand currently, and then around 2028, 2029, that gap widens. And so I wanted to get your take on that, and just to see like, okay, is supply actually reaching demand right now in your opinion?
I think in the very near term, there's more supply than the market believes there is. And I believe that's the case because of the slower than expected pace of real Japanese restarts. The fact that the Japanese have approved restarts is not the same as restarting and using supply. There would appear to be 10 or 12 million pounds of surplus inventory held by financial buyers that are neither Yellow Cake nor Sprott, rather hedge funds, banks, traders. And it would appear that contractual obligations from traditional industry suppliers like Cameco and Kazatomprom can be filled as to between 10 and 12 million pounds by borrowing inventories from financial interests and paying back in the out years with inventory at very low interest rates, less than 1% standby fees, and between 2 and 2.5% interest. So, and it would appear to me that the way, from the industry's viewpoint, that this problem be solved would simply be an increase in Japanese restarts. We notice that the lender in almost every case probably acquired their interest from Itochu, which is to say, Japanese inventory. And it's Japanese inventory that is either borrowed or bought and then on lent by commercial interests that's filling the inventory shortfall today.
Mhm. Got it. So, and you mentioned like these investment theses are, 5-year outlook. I mean,
Yeah.
sometimes you're even looking at a 10-year outlook. And so, would you say like the equities were getting ahead of themselves based off news hype, and then now we're seeing like, okay, well, it's taking a while for these restarts to happen, and for that supply and
Yeah,
demand gap
I
to
got to
grow?
say, over the last, 4 or 5 years that you've been interviewing me, we've done a pretty good job timing the uranium market.
Hmm.
And evidence of how good a job we've done has been the public commentary. When uranium was out of favor, in your interviews, we said to buy it, and people in the comments would say, "These guys are idiots. Why would you buy something that's down?" And then when it was popular and we said we were taking profits, trimming our positions, people say, "Man, this guy's out of his mind. Why would he be selling this stuff when it's going up?" The fact that both the high quality and low quality juniors, a basket of junior stocks in the last 12 to 18 months has probably fallen by 50%, maybe a little bit more. That would appear to me to be attractive. People look for a simple message to understand. They don't want to hear about the pace of Japanese restarts. They don't want to hear about the fact that Itochu is the seller. They want to believe in the tooth fairy or Santa Claus or something like that. You value uranium stocks based on the net present value of their future cash flows. If they have long-term contracts, you can assign some value to them. If they don't, you can't. So if you look at the whole universe of uranium juniors, there's probably 90 of them out there. There's probably 10 or 12 of them that at $70 yellow cake have economic deposits. Those people who have or are attempting to enter in at long-term contracts above $70 escalated with investment grade counterparties will be able to finance their projects to production, and you will know with a reasonable degree of certainty how much uranium they'll sell and what they'll sell it for. And you can construct a valuation case. The others, you can't. If you and I were to have this discussion live with 5,000 of your viewers, probably 50 would take the time to understand our thesis and would make the correct choice. The other 4,950 would have the investment result, sadly, that they deserve.
Yeah, yeah. So these headlines, I mean, they drive a lot of FOMO, fear of missing out, a lot
Sentiment,
of
yep.
they drive the sentiment. And so in your perspective as a legendary investor, how do you take advantage of that? I mean, obviously,
In periods of time when the markets were depressed and the uranium stocks are cheap, you buy them. You don't buy all of them because, as I say, the investment thesis probably only fits 10 companies out of a universe of 90 to 100. So you do the work. I know most people don't want to do the work. You do the work to identify those companies where their valuations are, first of all, identifiable, and secondly, where their enterprise value, which is to say their market capitalization plus total debt, is substantially less than their net present value, and you buy them. If they go lower, you try to figure out, did you make a mistake in your calculation? If not, you buy more. Daryl, the best stock I ever owned in my life, in terms of the one that, despite the risk, made me the most money, was Paladin. I bought it in 1999 when I knew that the uranium thesis had to work. Unfortunately for my psyche, I was 4 or 5 years early. I bought the stock for 10 cents a share. It fell from 10 cents a share all the way to a penny, 90% down. When you're down 90%, you don't have a hold. You have a buy or a sell. It's that simple. You either made a mistake or the market made a mistake. I revisited my premise. I bought a bunch more stocks, sadly not at a penny, had a penny and a half. But in 6 years, I watched it go from a penny and a half to $10. There's a lesson there. As Ben Graham says, in the near term, the market's a voting machine. In the long term, the market's a weighing machine. In the short term, it tells you what's popular. In the long term, it tells you what it's worth. And money's made on the delta between perception and reality. In my particular case with Paladin, the delta was extraordinarily broad. At 1 cent, the stock was substantially undervalued. At $10, the stock was substantially overvalued. But just getting the middle of that swing was extremely good. And there's a swing in place today. It is exacerbated, I think, because right now, if you're Cameco, you can borrow uranium at or about the spot price and sell it into your term contracts, which may be $10 a pound higher. Pay 3% to borrow the uranium and pocket the $10 now, paying the uranium back out of production 2 or 3 years from now. Now, this isn't really a valuation issue, but it's something to suggest that those few companies that have access to credit and have access to borrowed uranium and have contracts have the icing on the cake. They get to cream the market. It's worthy to note that although the term market is very opaque, you can't see it, it would appear that in order for buyers to have stability of supply in the out years, that they need to pay as much as $10 a pound above spot today. So the arbitrage for companies that have high quality reserves so they can guarantee the availability of supply 5 years from now or 6 years from now is that they can contractually agree to sell the stuff for $75 in the term market. They can borrow it in the spot market for $65 and pay 3% interest on the delta. And people, for whatever reason, who don't take the time to understand that dynamic, don't like it. It's hilarious to me.
Mhm. Yeah, so pivoting a little bit, appreciate you sharing that. So talking about risks. Obviously the risk for this whole thesis, everybody knows that there's some nuclear disaster,
Yep,
right?
that's
Um,
the risk.
so what about, is there a risk with there was Congress passed the bill for banning the purchasing of Russian uranium, and then right now we have Trump and Putin meeting together and talking about a peace deal, and I don't know how that even factors it, if that can even be reversed, or what is that a risk of, like Russian uh, I mean, is Russian uranium still coming, supply still coming to the US through other means, like, whether they sell it to uh, they give it to Kazakhstan, Kazakhstan gives it to us, or however they filter that. I mean, it doesn't have like a stamp on it, or I imagine, but yeah,
Daryl, it's mostly theater.
yeah,
The year after the ban on Russian uranium was enacted, American imports of Russian uranium doubled. So these morons say one thing. I guess they're not morons. They're smart enough to outwit us. These evil politicians say one thing and they do something entirely different. But the other thing is that uranium is fungible. You know, we've had sanctions against Russian and Iranian oil for years. So the oil goes to India, they refine it, and other people buy Indian gasoline. It's Russian oil. It's just, the Indians get to make a bunch of money per barrel. Assuming that sanctions were more efficiently enforced, then what would happen is that Russian uranium wouldn't come to the United States. It would go to China. And uranium from Kazakhstan or Australia that currently goes to China would go to the United States. Uranium is fungible. All these headlines are mostly theater. Are they inconvenient? Yes. We have long established trade channels with Russia. And by the way, they come from a very good background. The idea in the 1990s is that both countries had surplus weapons grade uranium and too many warheads. And it would be good for all concerned if we turned those warheads into watts. And
kilowatts.
so we began the process of buying Russian weapons grade uranium, blending it down, actually paying the Russians to do it, and using that to run our utilities. It was a very good trade, and I hope we return to doing that. Uh, Daryl, your audience might be amused at this. There's a military and political phrase called overkill. An overkill is enough weapons grade uranium to kill everybody on Earth once, where the fallout could kill everybody on Earth once. It would appear that the United States felt militarily secure with something like 3,500 overkill. In other words, we needed to kill everybody on Earth enough uranium to kill everybody on Earth 3,500 times. The Russians, because they didn't have as good a delivery mechanism as we did, which is to say their rocketry wasn't as good, decided that their security required 10,000 overkill. So between the United States and the Russians, according to intelligence sources, that is to say the US CIA, between Russia and the United States, we had enough weapons grade uranium to kill everybody on Earth 13,500 times. Now, mercifully, we only have enough weapons grade uranium to kill everybody on Earth 2,000 times. My hope is that we feel mutually enough secure that we only have enough inventory to kill everybody on Earth twice or something like that.
Yeah, for sure. So political theater, that's what's going on, you all. So I wanted to Chat really quick before we pivot to another commodity that I wanted to get your take on. We had put uh, a question out for the audience as to why Rick is considering moving Paladin up, and we have a few answers that I'm going to share. So this first answer comes from Joshua Yeo K5M. He says, I reckon Rick is considering upgrading Paladin for a few reasons. One, the deal with Fission finally came through, giving Paladin access to one of the best undeveloped uranium deposits, and coupling this with the potential for this to be developed with NXG's Rook 1 also adds value. Paladin's LHM operations have improved QOQ with better recoveries, resolution of water problems, but still some caution regarding stockpile grade variability. My guess is that if there's clarity with grades, or if Paladin can continue to be on track to meet fiscal year 25 production guidance, this will be the main driver of Rick upgrading Paladin from a 4 to a 3. Keen on the next episode and appreciate the interview and insights.
That's an extremely sophisticated response, and it's
Yes,
two-thirds
it
right.
is. It is.
Two-thirds right. My real attraction to Paladin is their ability with their existing production and their development stage production, that I believe that Paladin has the ability to enter into forward sales contracts that will allow them to finance their development pipeline at a lower cost and more certainly than would otherwise be the case. And if Paladin is willing to share the details of these contracts, it will allow securities analysts and credit analysts to develop valuation models of Paladin with an unusual degree of certainty and allow the price to go higher. Everything the gentleman says, assuming it is a man, is true, but you need to add on the ability to enter into contracts. I have not yet made the upgrade because I haven't seen the velocity and the volume of contracts and I don't understand them. In other words, I'm not able to do the valuation exercise in the absence of the contracts that I would require to see.
Got it. Got it. So you're waiting on those contracts to be able to update your valuation model for
Yes,
the
sir.
company.
Yes, sir.
Got it. Got it. Okay. Cool. Cool. Well, there you all heard it. You all heard it from Rick himself. And so be on the lookout for those contracts coming through from Paladin. Rick, I do want to talk a little bit about the about gold. And so I was going to go oil, but I'm like, we got to talk about gold. Gold,
Yep.
it's still grinding higher. And I also actually read the World Gold Council's report from last year, where central banks are still buying a lot of gold and such. And then we've had more retail increase. Jewelry has fell off quite a bit, but right now gold is over $3,000, and I just wanted to get your outlook on that. And then what's your outlook on the miners um, coming out of this huge significant price rise?
You know, I've been consistent in our interviews for 4 or 5 years, saying that gold runs when people are concerned about the maintenance of purchasing power in US dollar denominated savings instruments. And nothing has changed. Um, when people ask me when the gold price is going to move, or when they did 2 years ago, uh, I'd scratch my chin and I'd say, I think it's going to move in 2000. 2000, the gold price was $250 an ounce. Now it's $3,000 an ounce. Gold is up, what, 9% compounded annually for 25 years? Gold's done its job. My suspicion is that it doesn't merely go higher, but probably much higher. The reasons for that are very simply that the US government has weaponized the US dollar on a global basis. And as a consequence of that, it's less efficient store of value or medium of exchange. And foreign central banks, because of the weaponization of the US dollar, because of the US's manipulation of the SWIFT banking system, and our attempts to enforce extraterritorially our policies in other countries, we have forced other countries uh, to sell US treasuries and to look for other mediums of exchange, in particular gold. The second reason is because if you regard the US dollar as a debt instrument of the US government, which is what it is, the credit of the US government is becoming less good. On balance sheet, we owe the bondholders in excess of $36 trillion, $29 trillion net of the Fed's own balance sheet. But the real problem is off balance sheet, Daryl. The net present value of unfunded government promises. Look at old folks like myself, Medicare, Medicaid, Social Security, military pensions, federal government pensions. That number is over $100 trillion. Now, the IRS estimates that the private net worth of all Americans is $141 trillion, and the net present value of our obligations is $130 trillion, which means net we're only worth $11 trillion. So how do we deal with this debt? Do we say to old codgers like me, too bad, so sad, we promised you, but you're not going to get paid? Do we look forward to people with a public service pension, perhaps like yourself? Yeah, right, we promised you all that, but we lied. I don't reckon we do that. I reckon what we do is we honor the nominal value of the obligations while inflating away the net present value of the obligation. We did that in the 1970s. In the 1970s, according to the Office of Management and Budget, the US dollar in 10 years lost 75% of its purchasing power. So yes, we honored people's Social Security obligations. Somebody who was supposed to get $500 got $500 and it bought $125 worth of goods and services. And I think that's exactly what we do this time. Some old codger named Rick Rule, I don't know what they're paying me, $4,000 a month or something on Social Security. They'll continue to pay it, but it won't buy much. In the decade of the 70s, when the US dollar lost 75% of its purchasing power, the gold price went from $35 an ounce to $850 an ounce before settling out at $350 an ounce or something like that. Now, I'm not suggesting the gold price is going to go 30-fold or even 10-fold, but it wouldn't surprise me at all if the nominal price of gold added a digit, if it went to $10,000. Going to $10,000 with the purchasing power of the US dollar falling by 3/4 means simply that gold maintains rather than increases its purchasing power over the decade. And that, I think, is what's going to happen. It could be, like in the decade of the 70s, that as gold becomes popular, it doesn't merely maintain its purchasing power, but rather becomes a speculative vehicle and enjoys excesses. But for my own estate planning purposes, the only thing that I'm looking for gold to do is maintain its purchasing power while the dollar deteriorates. So I believe that the gold price will increase in fits and starts, exhibiting volatility by somewhere between 7 and 10% a year, compounded for 10 years. That gets you at the end of 10 years at a very large number. Now, the gold stocks are a different circumstance, and we've talked about them extensively on your show. You may recall that about 2 years ago, I suggested to you that the larger, higher quality gold companies had the same disfavor attached to them that the little ones did. And that usually gold bull markets began with the largest, highest quality companies moving first. That happened. They've been on a tear in 2024. Even big companies, like the Wheaton Precious up 60, 70%, Agnico Eagle up 60, 70%. I mean, they've been on an absolute tear. I think now leadership in the gold equities markets begins to come down market a little bit. I believe the big ones will still do well because we're attracting generalist investment into the precious metal space, and the generalist investors buy the biggest and best companies, or They buy passive investments like ETFs, which are overwhelmingly weighted to gigantic cap stocks. But as the very, very, very large cap stocks share prices increase relative to the rest of the sector, either leadership begins to devolve down the sector, or else the big companies take over the small companies. One or the other. High share prices are lower cost of capital. In a capital intensive business, that's a definable competitive advantage. If XYZ company goes up in price and ABC company doesn't, either ABC plays catch up or XYZ takes over ABC. And we're coming into that part of the market right now.
Okay. So, well, yeah, I've seen some movement. I'm mostly in the royalty and streamers right now. I've definitely seen some movement there, and so thank you for your outlook on the.
That's a good place to be. You know, what people forget about global markets is that what I would call the beta, the amount by which the gold equities outperform broad equity indexes, is high enough that you don't need to beat the beta. The good news about the royalty and streaming companies is that they make the beta with a lot less operational risk. So it might be in a rip-roaring bull market that you underperform the broad index, but you do it with a lot less risk. And that's a really good game for somebody trying to build wealth.
Yeah, for sure. Well, Rick, I know we have the symposium coming up and everything, so I wanted to touch on that really quick so the audience gets a glimpse of what's going to be happening this year. You all link is in the description for the symposium, and so Rick, share more about some of the folks that are coming out, and what are you most excited about with this symposium?
Well, Daryl, you've been there. This is a very, very high quality event. I believe this is the best natural resources and precious metals investment conference on the planet. That's the first thing I have to say. If you are interested in investing in precious metals and natural resources, and I can't understand why people wouldn't be, the first thing you do is invest in your own knowledge base. And I'm delighted to say that given that we've put on the conference for about 30 years, I'm confident enough in our product that I guarantee all attendees their satisfaction or complete refund, money back guarantee. So the financial risk is all mine. But be prepared to work. As you know now, Daryl, over 4 days, we give you 50 hours of programming. We force feed it to you. Now, we overcome that a bit because I do a whole bunch of interviews before the conference, so you can come to the conference prepared. And we give you access to the conference recordings for a year. So in addition to spending 50 hours at the conference or on live stream in your own home, you have access to the material for a whole year, and you're going to need it for a whole year. Now, let's get back to your question. How are we going to do what we do? We have great big picture thinkers who tell you about the world the way it is, not the way the Democrats want you to believe, not the way the Republicans want you to believe, not the way CNBC wants you to believe, but rather the way it is. This year, our headline speaker is David Stockman. He's important because of all of the furor around DOGE, the Department of Government Efficiency. You see, David Stockman ran the Office of Management and Budget in the first Reagan term. He was the one who oversaw the attempts by the Reagan government to reduce the size of government. And he saw firsthand how the politicians derailed the will of the people. He has recently written a book called How to Cut $2 trillion Out of Our Budget. He did Elon's work for him. I think the most important issue of our time, Daryl, is U.S. government spending, the U.S. government debt and deficits, and U.S. government tax. And there is nobody better than David Stockman, nobody in the world better than David Stockman, to talk about the process of fixing that. We go beyond David Stockman, though. There's problems on Wall Street. And those problems are at our conference addressed by Nomi Prinz. Her qualification, she was a partner at Goldman Sachs. She was part of the problem. In a biblical sense, she speaks from the belly of the beast. There's a problem at the Fed, too. And Daniela DiMartino Booth, who was at the Fed doing research for the Dallas Fed, again, in the belly of the beast, addresses the Fed. There are structural problems on Wall Street, and those structural problems are addressed by Jim Rickards. Jim Rickards, for those who don't know, was chief counsel at Long-Term Capital Management, who almost brought down Wall Street when they failed. Again, somebody describing the problem from the belly of the beast, somebody who is part of the problem. This is important. You can't get this anywhere else. Anywhere else. You have to know the way the world is in order for you to prepare a portfolio to protect your family against the world. It's important that you do this. After we've established a worldview, we have great investors, people who have made money in natural resources for decades, decades, not like the brokerage firms do. Some young analyst who failed analyzing crypto, failed analyzing pot, and failed at analyzing automobiles, who was parachuted into gold because he or she couldn't do much damage in a small sector, but rather analysts who've been successful in the sector for a long time. So we tell you the way the world is, and then we tell you how to invest your money to protect yourself and to prosper, given the circumstance that's there. Importantly, Daryl, at our conference, every single exhibitor who comes to our conference is vetted. At most conferences, to be an exhibitor, all you have to do is have a check that cashes. At our conference, you have to be in accounts owned and managed by the conference sponsors, primarily myself. No guarantee that every stock I buy goes up, but there is a guarantee that if I invest money in it, I know it pretty well. At every other investment conference in the world that I know of, the qualification to be an exhibitor is simply that you're willing to pay. We have, as you suggest, the Living Legends panel. This is everybody's favorite feature of the conference every single year. The Living Legends are people who have built multi-billion-dollar companies from scratch, talking about how they did it, talking about how the lessons they learned make them better investors, talking about how you can be a better investor too. This year, we're bringing on an Investors Legends panel, people who have built and operated multi-billion-dollar investment portfolios. Again, not beating their chest saying, I'm the greatest thing since sliced bread, rather talking about their mistakes, talking about how their successes, and talking about how to become a better investor. The upshot of all this is whether you attend in person, which I would prefer, or you join what was last year over 1,000 investors worldwide from 33 countries, enjoying the conference from the comfort and convenience of your own home. First of all, you'll have access to all the course material by way of recordings for a full year, and you'll need it. And secondly, it comes with an absolute gold-plated money-back guarantee. There is no other investment conference in the world that I know of where the conference promoter will look you in the eye and say, attending this conference has no financial risk to you. If you don't think I've earned my tuition, simply email me and I'll give you your tuition back. Now, over 30 years, our programming has been of high enough quality that we've had to refund less than 1/10 of 1% of the proceeds that we've received. Nonetheless, the financial risk of attending this program is all mine, not yours. Nobody else in the world is confident enough to do that.
Wow, a lot of value there.
You've
So
been
you
there.
all,
You've been there.
yes,
You
yes,
know. We work you
it's
hard.
about,
The one thing I also need to say is if you aren't prepared to work hard, if you're a tourist, if you're somebody who buys a newspaper to look at the funnies and the crossword puzzles, don't come. We're going to work your behind off for 50 hours over 4 days. And if you spend 50 hours over 4 days, you were there. If you pay real attention, you work hard, you take notes, you compile the notes at night, all that kind of stuff, you still don't get it all. So you have to play the tapes at least once,
yeah,
preferably twice, which means really if you aren't prepared to devote at least 100 hours of your life over a year, but probably more like 150, don't come. You're going to disappoint yourself.
yeah, for sure. You got to do the work. So, Rick, I'll be sure to link to your YouTube channel, the Rule Classroom, where you all can engage and learn a lot more technical skills when looking at markets and companies. And then you all be sure to click the link in the description below to the Rule Symposium and purchase your tickets today. So, Rick, thank you for coming on. Appreciate your time.
Always a pleasure, Daryl. Thank you for these conversations. I've enjoyed them. I think we've done a pretty good job over the last 4 or 5 years.
Yes,
Helping people buy stuff when they're out of favor and hopefully helping people sell stuff when they were in favor. So it's a pleasure. Let's keep doing it.
Yes, indeed.